Jerome Powell opened the door to reducing interest rates. Stocks soared. If you don't have assets, you're going to be left in the dust. Let me explain. First of all, it's been in July that Fed was saying that their concentration was inflation. They're worried about the jobs figures, but their concentration, inflation. August, on Friday, Jerome Powell, he said, our concentration seems to be shifting and we're looking at the jobs market as more important than inflation. Markets said that means interest rates are going to be cut there, right? And that means that you're in a situation whereby the Fed is saying we're going to live with higher rates of inflation. That means stagflation. What's stagflation? It means you've got inflation whereby the cost of what you're buying is going up. But at the same time, you've got an economy that's struggling. Okay, why does stock like it? Stock is liking it because it means interest rates can go down. And that means particular companies can grow and they can grow faster. But what does it mean to you and your money? It means if you're not invested, then you're going to be losing money. Why? Simply and solely, when you've got higher rates of inflation, you've got it in the UK, you've got it starting in America and it's set to continue, where inflation is increasing, but they have to reduce interest rates because the job market is starting to fall. Companies do well in that market. It may surprise you, but yes, interest rates come down. Inflation means the price of goods is going up. The companies find ways, they find different methods to build and to grow their profits. In other words, it's an environment whereby in cash you lose money, but if you're invested, you can make money. So where can you invest right now? Well, you're going to see companies that are going to be doing exceptionally well, always in the market. Think tech, fairly obviously. Always think there might be a gold rush. Who's selling the shovels? Because they're going to make the largest amounts of money. Also think defense stock. We're in a world where you've got to continue in situations around the world. Defense stock and countries are realizing they need to invest in defense. Expect banks, particularly in Europe, to do well. Why? Because again, you've got interest rates that are there still, and at the same time, the interest rates are coming slightly down, means bad debt isn't going to come in, but there's enough interest rates for them to be making a profit. Think energy, things like commodities, gold, they go up in these environments. Why? Because you tend to get, with inflation, a commodity price increase. Opportunities to invest, but don't get left behind. Take note what's happening and make sure you put in some action into investing. Talk to a financial advisor to get it right, but action is the most important thing right now. Talk to an advisor. Best investments to get the best returns.